TGIF Warriors, how's everyone doing today? It was a great week hanging out with you guys, sharing ideas, coming up with spots, talking a little bit about psychology all week. I had a great time. How about you guys? Hi, John, Ash, Kevin, Patrick, Yasser, Warren, Vlad. I feel like that lady on Romper Room where she used to, I know it's probably past your time, or it was before your time, may I say. She'd look through a mirror and say, oh, Yasser's raising his hand. I see Billy and Bobby and Susie's home from school, sick today. I actually believe she could see us through that mirror staring in the television screen. So I want to start off by acknowledging what a great call and pattern in play that I started the show off with yesterday in EG. So, you know, Stelios is supposed to cover Chuckle Patch. Stelios is supposed to be the macro guy. All I could say about this entry is macro my ass. He's like a lean, mean trading machine that diagnosed this perfectly. I mean, look at the entries. See, if you had been a ForexAnalytix subscriber yesterday, even if you weren't, I gave it away. But maybe as a subscriber, because you're paying for something, you're going to take the things that happen in the free room seriously, because I know how people think. They want to recover what they pay every month in the market. You know, that's part of how they measure it. This is a cost of trading. But look at these entries. Check it out. 90-10 to 90-30. Of course, he had a very wide stop, and last time he needed it, I think he'll be at break even pretty soon. He'll be pulling a stop. But check out the entry when I look at the chart here. Remember this, 90-10, 90-30. Here's a high candle, 90-32. 140 pips on EG. At the 50% retrace level. So one of the better pattern in plays that I saw this week, and you know what? All it took was one, a full-size contract, 1,300, a mini, 130, definitely one pattern in play paid for your subscription. Give me a why if you understand it and you think that way. So this is just one, and we're not even halfway through the month. So while I'm talking about a great call by Stelios, there have been others by the rest of the team. So why don't you take a minute and invest $1 in your trading future if you haven't already. And I do want to thank all the people that took advantage of our new season. That's not what I'm thinking. It's more education. Okay, Ash. Yeah, I believe our sessions are great teaching tools, and they're even better that they're recorded, right? So you can always go back on YouTube and review the session and stop it. Okay, so if there's something you see, Steve showing a ending diagonal, or go back to Greg's counts that he showed yesterday and stop it. Stop the video. Look at the formation. Look at the setup, right? And then go to your charts, and you'll begin to recognize what the team is recognizing. So use it that way. Okay, Ashley, I think it's great. You know, I used to say to people, you could either invest in yourself and good education by competent analysts and mentors, or you could donate to the market. And I've seen some people donate and pay Ivy League tuitions before they woke up. Okay, so I think you guys are smart to be here. It's a great place for intelligence gathering. But anyway, your risk to check it out, like right now, you may want to know, well, okay, Stelios hit it on the nose. I wonder if Nick saw that or Greta saw that. And there was confluence. Okay. Okay, you know, there's another step, Ash. In my experience, people do not take demos too seriously because it's just a demo. So a nice compromise, well, try this. A nice compromise is to find a place you could trade micro lots. Because then 100 pip move in the euro is $10, okay? Because it's a big bridge to cross when you go from demo to having money on the line. So why not, even if it's small change, at least get used to the emotions of real capital being on the line. So that's always my recommendation, is that people go, oh, well, it's just a demo. But you won't have that attitude with a micro lot, okay? So that's the end of my sermon today. I just really was very impressed by this call by Stel. And actually, the broken clock Forex Stop Hunter was right for a trading suggestion here out of the room. So last week, right about fading dollar strength this week. Even if you took the worst sale at like 285 and then 320, you had many pips made. Even here on the worst sale, you have 30. My philosophy is always to take partial profits. You'll probably say, well, you know, why would you have a stop here, Dale? It's where everyone else's is, right? Because yesterday I said, don't put a stop here because they're going to go for it. But now they've cleaned out all the shorts, right? So everyone that was stopped out over 32.10, they're going, huh, it's a 60 pip winner, right? So there aren't as many stops built up here. If there are, they just started to build yesterday. Anyway, pretty negative action. It's doing nothing right. I still think there's potential for these lows to be taken out. I looked at the low on the RSI and it's a confirmed low. So still like this trade going forward. And then we talked about the potential of a right shoulder in the euro. Euro's coming off pretty good here. I want to see what it does next week around 1780. Let me just draw some fibs on this. So everyone have fun this week, hanging out? Okay, so I see some confluence here with the moving average and halfway back at 1774. So we'll see what happens there. I think that's going to be pretty much a line in the sand if the dollar is going to continue to weaken. It's got a hold in there. That's what it looks like to me, around 1780. Everyone with me on that? So if you're a euro bull and you bought this rising wedge, let me get rid of this. Last week when we talked about it on the NFP, a 3 drive to a bottom, and you were patient enough to ride it up to what a lot of people are now going to call a right shoulder on the daily. So you could see how they think that's possible, and it could end up being possible. So left shoulder, head, right shoulder, neckline down here. So we're going to see if this move that happened up until yesterday is real, I figure, by Tuesday of next week. Give me a Y if you're with me on the analysis of the euro. Still think that the yen is vulnerable, even though the S&P's recovered. That's part of the reason why I like the yen cross shorts. Looks like it's trying to hold here. That's the daily. But still kind of a weak recovery, a little bit of divergence here. And on a weekly, check it out, it's really hanging on by a thread. So I have to have my computer fixed. My mouse has been acting up for weeks. So that's not it. So it's my mouse. All right, I give up. I can't change. Anyway, take a look at take a look at the weekly. I think there's some plug missing or something. I've been using it this way for a while. The weekly on the end looks heavy. Heavy, baby. Hi, Blake. I hear you. How are you? How are you, man?
Good. Just making an adjustment. I lost my sound. I was logged in, and then I heard everything you were saying, and then all of a sudden I lost my volume, and then I had to log out and log back in. So just making some adjustments here. I'm not too sure why.
Okay, buddy. What a great pattern in play by Stelios on Europound.
That was, he's not here to defend himself, but that was pure luck. So
yeah.
No,
and
but
you were there for it. You were a little underwater before the turn, but I'm sure that worked out for you.
Yeah, it ended up being a really great trade. It was like it worked out much better than I thought it was going to, and a lot faster than I thought it was going to. I mean, there's a comment that the EU may grant the UK a 2-year extension on Brexit negotiations, and then right after that, the pound just took off. I mean, that was just an amazing. The problem is it really screwed a lot of people. I mean, the pound, that was like that was one of those days that I think a lot of people wish they had an extra laptop to do the laptop toss.
Well, we talked about, though, Blake, when you were showing the weakness and where the pound was at, that it was good or bad from there. And I believe I said, for EG to work, the pound has to dig in its heels and begin to outperform the euro, and boom.
It was really. I mean, I'll grab the chart here. Fortunately for my tweets, they came out pretty much. I mean, I couldn't have my I don't know if you saw the tweet. It couldn't have been timed any better. Well, first of all, the we'd hit. So this is like the benefit of using ForexAnalytix, but versus just just reading tweets that maybe myself or Steve or ForexAnalytix account tweets, or Stelios or whatever, or Nick or Greg for that matter. So yesterday, the euro pound, if you pull up the charts and you go to basic technical analysis, let's go to the 4-hour chart. So this, you were notified right here. I mean, right as we were tagging the underside of that trend line. You can see it right there, right? It was right there. And at that moment in time, at that moment in time, it said the pair posted a false breakout at the highs. Oh no, that was the end of the day. Euro pound testing undersided trend line and near 50% retracement. Careful if you were long, okay? That update came right there. And then the next update was right here. This is the one that I actually tweeted. I said, we rejected the 50% retracement and we could actually reverse from there. And then I tweeted that, and it already came down like 20 pips. And then after that, we started to break through that. We started to break through that support. And then obviously today, we're down much further lower. So, if you were using ForexAnalytix, you were very well aware when we hit that 50% retracement, and Stelios right at the same time, he wanted it. He'd been saying for maybe even an hour before I had posted the very first chart. He's like, I'm going to start shorting the euro pound up here above 90 pence, and he shorted it like 90.20 or something.
He had a pattern in play before it happened, and. Yeah, and for Stelios, I was saying when your volume was down, that's how I started to show that you know, for a macro guy, he was a lean, mean trading machine that, you know, he had the high 90-10 to 90-30 pattern in play sell.
Yeah, he did. He tagged it, and you know, obviously when you trade, there's going to be a little bit of luck and timing with. I mean, no one knew that comment was going to come out, and you know,
Yeah.
but it was on his on his.
You know,
his defense
he's spent a lot of years in the UK, man. He's got some pretty deep connections there.
Yeah, he does. He's a very avid pound trader and loves the euro pound, and he's very bullish the pound as it is. So he looks for those specific times.
He's British. He's British, or he's a Greek.
Right. Right. So one of the things that you know we do as traders, and I want to make sure I express this, is you can be a dollar bull, you can be a dollar bear, you can make money in either direction. I'm going to take the dollar index, and I'm going to just explain, you know, this. I remember all through 2016, right through here, right all through here, I was an avid dollar bull through there. And just so you all know, I was a dollar bull all the way, actually, through all of this. I mean, I was a dollar bull all through, all the way until this point. I started being bearish, right on, you know, the election. I started being bearish, but I was bullish all the way through here. But you can see all of 2015 and all through 2016, it was very choppy waters. And even though I was bullish the dollar did not go up all the time, but I did very well in 2015, 2016. Those were very good years to be a dollar bull. Just, you know, not as good as obviously the 2014, 2015 move. But I'll tell you, you can make money in either direction. You don't have to always be a, you know, dollar bull, dollar bear, pound bull, pound bear, euro bull, euro bear, whatever. Yeah, but you can make money in either direction, and that's really true. And you know, like Stelios plays the pound on the long side, which I get, and I kind of agree with him down here that you do that. But if you're a pound bear, you can also make money as well. I mean, this has been a very, and if you look at the daily chart, this has been a two week straight up, you know, destruction of the pound over the course of the last 2 weeks, up until the last, you know, 24 hours. And now the pound's, you know, obviously strengthening. If you guys are pound bears, okay, that means you know, you think the pound is eventually going down. Well, you know, the better place to play pound weakness is probably down here. You know, once the euro pound gets back down towards 88 pence, you know, from 88.90, this is probably the better place to play. You just have to be very strategic in how you play, you know, pound bullishness or pound bearishness. And right now, you know, it was pretty clear yesterday after that news, and because the news was not refuted, that the pound would continue higher overnight. I played the pound, actually, I played it in Asia. I played the pound long from, I played the pound long from 132.60 to 132.70 something last night. It went as high as 133 and change. But I played it in Asia on the long side last night. Just I was watching some football. I was watching Thursday night football, and you know, just got in and out and took like, you know, 12 pips. I shorted the euro pound overnight at 89.20, and I covered it this morning at 88.91. No. I covered it at, looking at my prices right here, I covered it at 89.89. So, you know, and I made like 30 pips on the short side. And it's bounced since then. But the point I'm trying to make is, last night and yesterday, the pound had such a very big reversal candle. I mean, this is big. I mean, you look at yesterday's reversal candle on the pound. that long wick, whenever there's a long wick in the market, okay, you got to understand the anatomy behind the wick, okay? The wick, and I'm going to just explain this really quick, a little bit of training before we have this data coming out. The wick means people were stuck in the market, okay? So in this case, we sold off and we reversed sharply because of that news. People were trapped on the short side. So whenever you see a long wick in the market, it typically means you're going to go the opposite direction, at least a little bit. And we saw that in, like, here's the pound yen. Pound yen was a great example. The pound yen looked like at one point yesterday, and let's get rid of this. The pound yen looked like it was breaking down out of this wedge, and it reversed sharply. And so you knew that it's going to have some bulls coming in because people were stuck short down there. That's what happens when you get these long wicks. When you get a long wick, it typically will prop prices in the opposite direction, you know, more times than not. And that's why, like, I had no problem playing the pound on the long side last night, just scalping around. So those are, you know, those are just some things that I've taken from the market over the last 20 some odd years. And that's why whenever I see a very long wick in the market, I'm typically not going to trade back in the direction of that wick. I'm going to trade opposite the direction because I know people are getting, they got stuck in there. Now, let's talk about the data that's coming out here momentarily. We have inflation data and retail sales. Now, this is CPI. It's consumer inflation, not producer inflation, which we had yesterday. But the PPI came in the strongest levels of PPI, and I want to say, let me take a look at the chart because I have to go ahead and just look at yesterday's PPI. This is Forex Factory here. Just I can get a chart, and this is producer prices. I want to look at the core. Let's look.
You ever work in a Forex factory?
Sometimes I feel like it. This is, but you can see this is the highest inflation that we've seen really, you know, since 2014. We're matching the highs on producer prices. So I do feel like I work in a Forex factory.
You know, we're on an assembly line with our mouse.
Right, exactly. So if you look at consumer prices, we're expecting consumer prices to come in high, like at levels that we haven't seen in you know, since 2014, you know, as well, and maybe even longer than that. So we're expecting CPI to come in hot, and the whole market is. The one thing that I have to mention with that is we're expecting CPI to come in hot. We're also expecting retail sales to come in hot. But if you look at the dollar yen did not respond well to the hot inflation numbers. So what has to happen, in my opinion, is CPI has to come in extremely hot and retail sales has to come in extremely hot. And we're expecting hot numbers to come in today. If they do not, the dollar might have an issue. And you know, the euro has come off these highs, which it was the 50% retracement. Amanda, who's in our chat room, she was just talking about if this is a flag, and I'll show you what she's talking about. She was just talking in the chat room. If this is a flag, we're at the flag bottom, you know, on the euro dollar, which is true. I mean, you know, you can actually draw it more like that as well.
That would measure new highs, I think.
Well, you know, it would at least push us up towards the upper end of our range if the case, but you know, like, you know, 119.75, you know, it would take us, you know, higher. That's why, and if you look at the dollar yen is already kind of weak. And what's also interesting about the dollar yen, I have to point this out, and I just read some analysis from another analyst stating the same thing. And this is something that I had a conversation on the phone last night. Last night I was having a conversation on the phone with one of the best traders that I know about CPI, or excuse me, about the lack of follow through with the dollar yen with the S&P. I'm like, you know, the divergence between the S&P and the dollar yen is quite alarming, and all the other yen pairs for that matter. They stopped following the S&P higher, which is a risk if stocks turn lower. And we are, you know, as you guys know, we're at all-time highs. So, you know, any type of hiccup in the stock market, it's probably not going to be good for these yen pairs. So, you know, and so what we got to watch the dollar yen today. I think the dollar yen is going to be really important. We already tried to probe stops below 112. I think if we get back below 112, the dollar yen's probably going to make its way back to the 38% retracement, which is 111.10. And you know, we're developing a nice little rounded top after, you know, a very big move. I mean, we went from 107 to 113. I mean, we were just down at 107 last month, and we rallied sharply, and we're just kind of getting this like little rounded top here. So, you know, like I said, any move below 112, and it's probably going to expose and move back down to 111. CPI is going to be here in just a few minutes. I'll cover it with you, and then I'll pass it over to Steve.
Blake?
Yes, Steve.
Blake, good morning.
Good morning.
By the way, a little comment on the yen you were talking about. The yen actually fell a little bit, while I don't know if you noticed, probably you have, the Nikkei went parabolic yesterday, and the yen was completely, you know, decoupled from it completely. Because if you see the Nikkei move, it was very strong.
That's funny you say that. Joe, who is he trades usually in the Asian markets. He's in our chat room. Last night I was chatting with him a little bit, just, you know, while I was watching football, and I was kind of running back and forth, and I scalped in and out of the pound, but I didn't even mention it in the chat room. But we were in the chat room, and he was like, yeah, I bought the dollar yen because the Nikkei was rallying, and here's the Nikkei, you know, talk about parabolic. The Nikkei is parabolic. So he's like, I bought the dollar yen because the Nikkei went parabolic, and the dollar yen I actually ended up losing 4 pips on, is what he, you know, had wrote me. He goes, because the dollar yen didn't follow last night. And that decoupling is got to be very concerning to traders, because traders trade on correlations a lot, and when correlations break down, that's usually bad, because you got traders that are still trading on correlations, and they go, wait a second, why didn't the dollar yen go up when the Nikkei is blasting in the highs? Why do I keep selling yen, buying the dollar yen, and this is like, here's the last few hours as the Nikkei has rallied. You know, I keep buying the dollar yen and I'm not getting paid as the Nikkei is going up. Why isn't the dollar yen going higher? So that's, you know, it's probably a bit of a concern. Anyway, we're about a minute, and that's a great observation, Steve. Thanks for bringing that up. We are about 1 minute away from data. So remember, we got retail sales, consumer prices. This is all very, you know, very, very big news, and it's going to be a market mover for sure. So we need to be ready. And you know, I guess I just let's just watch the dollar here. I think the dollar yen is the one to watch. And remember, we are expecting strong data. We're expecting strong retail sales. We're expecting strong CPI, and it should come in hot. It should come in hot. So
Let it happen.
Here we go. Data is
Hot.
not yet. It's out, and ooh, God, the
Not
dollar
too
yen.
hot.
Not too hot.
Okay,
Not too hot.
if you still have euro yen shorts on, you got to use something like this to
I do.
take something off the table.
Oops, there's the Canadian yen. I had an alarm set. Let me get rid of that.
Yeah. So good observation about the potential of it rolling over.
Yeah, it's getting there. The euro yen's closing in on it. Dollar yen really slumped here. Oops,
Yeah, that's what I mean. You were showing the dollar yen.
Yeah.
Yeah, that's.
Yeah,
heavy.
it's
Heavy.
trying. It's trading heavy, and let's recap the data. What did we get, Steve, as far as data goes?
Not a big miss, but a miss. We got 2.2 CPI with an expected CPI of 2.3 and retail sales at 1.6 with expected of 1.7. So they both missed, not by a lot, marginally, but they both missed.
Yeah,
Pretty big reaction for it almost being a wash, don't you think, guys?
Yeah, I mean that's a pretty big move here. Here's the Canadian yen is trying to break the. See, this Canadian yen is, you know what's at risk here, and this is why I set the alarm. So we have this big inverted head and shoulder pattern. The neckline comes in at 88.85, which is still pretty far away, but what you're seeing here is you're seeing this uptrend line get broken, this breakout point get tested. So we could get pummeled here in the Canadian yen, and this thing could really come under some pressure. The euro yen is at support. It tagged overnight trendline support last night. And we got to keep an eye on all these yen pairs. Actually, here's the Aussie yen, it's just kind of sitting there. New Zealand yen, New Zealand yen actually a little perky. Dollar yen, I mean, dollar yen we're hitting new lows on the session right now. So. And
we're breaking out of Amanda's flag. Nice call, Amanda.
Yeah, Amanda in the chat room, she really, look at that. Great call. Great call.
Don't you think we're out of the flag here?
Yep. Yeah.
It's creating a new flagpole. There's a flagpole on the flag now.
Yeah, that was a pretty good call. Oh my God, the dollar yen's getting pummeled right now. Bam, dollar yen.
People come off two handles today.
That's actually NASDAQ's going higher right now. Nikkei's under a little bit of pressure. Dollar is just getting absolutely worked at the moment, just absolutely creamed. So yeah, it's just pretty good moves here in the dollar. So, well, with that being said, the dollar is probably going to stay weak for the day. I would assume the dollar is probably done. The euro is probably done up here intraday. Maybe about 118.65. That might cap it. But I'll tell you what, this dollar yen looks like we're going to 111. It looks like we're at the 618 right now, 111.77. But no, that's not the 618. My mistake. I have to take that back. That is not the correct. That's the previous fib, so let me get rid of that. So I mean, yeah, it looks like we're going to like 111.10 or so in the dollar yen. Very weak here. Euro yen hasn't really moved because it's being offset by the euro. Yeah, same with the Aussie yen's not really moving. The Canadian yen is being stalled too because of the dollar Canadian's under a little bit of pressure. But all in all, very good moves for the dollar. Gold is just ripping right now, and that's going to help my pip. So actually, let's take a look at gold. Yeah, I mean, gold's hitting new trend highs. So
I agree with your 1320.
Yeah, I mean, the 1320 seems very doable at this point. So great stuff. So all right, Steve. Well, I'm going to pass it over to you. And
by the way, Blake,
yes.
Completely unsurprisingly, US stocks are absolutely decoupled and are moving in isolation to anything that happens in the market.
Yeah, they don't care. They don't care
about anything. I mean, I really doubt that no matter what happened at the moment, they would even care. Dollar goes up, they go up. Dollar goes down.
You wanted to see a broken correlation, Steve? Pull up the monthly or the weekly on the Aussie yen and lay the S&P on top of it.
Oh, yeah.
That's something Chris Laurie taught, risk off. Aussie yen, when Aussie yen used to go down, the S&Ps went down.
Yeah, because
they peaked out a few years ago.
There was such a huge interest rate differential, which is just not so huge anymore. So that's the big problem with the Aussie yen these days, And So, Steve, I passed it over to you. You guys have a great day, and I'm gonna be heading out in a few hours. I'm gonna be taking a little drive, but I'll be back by Monday.
Don't forget to wave at me when you're on the 15, man.
Yeah, I will.
All right.
Drive back to.
My exit is Temecula Parkway, so just wave and I'll wave back. All right.
Okay, we'll do. Actually, I think I'm gonna take the. I'll take the
10. Yeah, through.
I'm going
through
Mango. I'm going through Alpine. So yeah.
Oh yeah. You go through all those canyons. Yeah.
Yep.
All right.
All right, man.
Drive safe.
Okay, Blake.
Thanks, guys.
Bye-bye.
Hey, Steve. What's happening, buddy?
Hey, Dale. Good. How have you been?
Good.
Okay.
In fact, you know what? I'm so shiny. I'm as shiny as a diamond today that if you saw me in person, you'd have to put on your shades. I'd blind you. That's how I am, buddy.
Okay, that's really good to know. That's really good to know. Let's tell a little bit of a story here of what's happening at the moment. Okay, let's have a look at the bonds, because we talked about the bonds, and as you see, everything that's happening now with the dollar is also obviously a treasury bond and the yields story. So on Friday, we had this rejection from the channel support, and as you see today, we're accelerating higher. I was expecting a pullback after seeing that, and we are getting that. We might go to 38.2, we might go to the 50% fib, but I honestly expect a resumption lower after a corrective move higher. The reason I'm saying that is because now if we reverse engineer this, my personal thesis about what the bonds are going to do, you can also translate that to what the USD yen is going to do, what the metals are going to do. For example, we are getting this very nice recovery in gold and in silver, but if the bonds roll over and start dumping once again at some point next week, then the same thing is going to happen to gold and silver. So we are already testing an important level. Of course, that doesn't mean that we cannot go higher from there. So this move that we had drawn like this can extend to something like that. Okay, to go to 1310, it can go up to 1320. Okay, but I would be very, very skeptical of being long metals up there, as I would also be very, very skeptical, since Blake was showing and we were talking about the USD yen. I would be very skeptical of, for example, selling the USD yen, let's say at 110 or at 1080. I mean, we have several support levels. So I really think that something like this might happen. So it's the exact opposite of what seems to be happening with bonds and bond yields. So currently we are seeing this move. We're seeing this dollar weakening, but I'm really decided to remain more patient. It is more than obvious that we have very slow markets, quite a choppy environment. Technical analysis works best when we have volume and some kind of volatility. Recently, we've had lack of both of them. So I think under this kind of an environment, somebody has to stay a little bit more nimble and be a little bit more careful with with taking positions. That is also why, and if you remember, I talked about it like some days ago. We are also trying to adapt with ForexAnalytix the way we issue patterns in play. So when we feel that the market is more clear, we issue more. When we feel that the market is the market environment is more opaque, we issue less because we want to have high conviction. At the moment, it happens that we have 3 of them, which is fine. It's good. But for example, a few days ago, like for half a day, we had none, and other times we might have 5 or 6. So now going beyond that, let's have a look at a few pairs. First of all, the euro. The euro got rejected yesterday from the zone we had indicated, this 118.50 to 118.70. But of course, if you see at the 4-hour chart, as Blake showed, that can also be interpreted as a bull flag. So what happens from here is quite important. Also, how we close the day to day. Cable was
well, unless it's a huge reversal, it's a real positive week on a weekly candle.
Which one are we talking about now? The euro. Ah, okay, yeah.
So I mean, it was a strong week.
Yeah. The cable was the more surprising because the cable is on its way to register today the 5th consecutive day higher. So every single day of the week will have been an up day if we actually close higher today. Yesterday's reversal was, of course, it was a news bomb as Blake mentioned, etc. But still, it was like, extremely surprising for a technical standpoint as well, because we got a very, very nice rejection from the area we expected the rejection, and it was going comfortably lower, which was indicating a resumption to new lows, and then this happened and we got a reversal, and today we're getting some follow through. So obviously the cable has something totally different in mind. Next resistance I have is like near 134, but obviously if we don't roll over quite soon, then things change for the cable. So it's what seemed like an obvious corrective rebound before moving lower is now being put in doubt. So we need more clarity there as well. Same thing happened with the Aussie and the Kiwi. I'm probably actually going to take profits on the rest of my Aussie USD short, because this thing did not play out as expected. I mean, we started out the week very nicely because we got 3 consecutive recovery candles that were extremely reluctant. I mean, it was like 2 pin bars, and then we had another little candle with an upper wick, and everything was pointing to this being also a continuation pattern, same as the Kiwi. I mean, sorry, that was the Kiwi, and this is the Aussie. So that's what we were expecting, having to do with seeing the price action and the reversing as well. The Aussie, we have to be honest here. I mentioned that back then on Monday that it was testing a major area of support, because this was the area that was capping price action for several months. So backtesting this area was really critical, because if it was to actually hold somewhere, it had to do it there. And we had the initial reaction, which I was expecting, but to be honest, I thought that another push lower after that is more likely, but now it's accelerating higher. I'm going to wait to see how the day is going to close, but most likely than not, I'm going to book the rest of the profits here as well and wait a little bit more, because as I said, now we have a choppy environment. The dollar is completely undecided of what it wants to do. Although, this is the area I'm checking, the 92.80 to 93.10 area, that support. If we actually close below it today, that might be a strong indication that Greg is right in his assumption that the dollar has one more low left before actually turning higher. Okay, so this scenario is going to gain a lot in credibility today if we actually close below here. So this is an area I'm monitoring, and this is an area I expect, and the DXY and the treasuries, I expect us to tell us what can happen like next week or next couple of weeks. The only sure thing is, you need to be nimble, because we see in a lot of currency pairs and in a lot of tickers in general, we see that we get like strong moves in one direction, and then they get exchanged with strong moves in another direction. And in this environment, you just need to be a lot more careful and think twice, before you take a position. Some opportunities that are here, though, and we can have a look at them. One of them is Euro-Aussie. Euro-Aussie had this nice break above the triangle. It's now retesting, an area of interest in the triangle. So, one potential trade I have in mind is this one. So I'm waiting to see if we're going to get some reaction of this area. If we do, I want to be a buyer. Only if we do, okay? So that's one pair I'm looking at. On the other hand, which is a little bit troubling, and that's why I also had a look at the cross, is EuroCAD, which is actually showing something like a pennant. Okay, so EuroCAD, for example, looks better to the downside. So that made me have a look at the Aussie CAD, which, as you're going to see here, remains in a wedge-like formation. So I have no strong bias with that. So this kind of divergence I see between the Euro-Aussie and the EuroCAD cannot really be consolidated. I mean, cannot be resolved from looking at the cross. And I wanted to mention that because this is one little issue that makes me a little bit skeptical about the Euro-Aussie trade. I don't know if my thought was a little bit complicated, but in essence, I'm not seeing confirmation from the EuroCAD, which tells me that it might have more chances of going lower, and the Aussie CAD, in the short term, looking strong but still within a range. I'm a little bit skeptical of the EuroCAD, but that doesn't, of the Euro-Aussie, but that doesn't really mean that I wouldn't be taking the opportunity if I really see, a reaction from 150.50. So, this is one thing I have in my scope. Another thing I have, one of the cleanest charts out there at the moment, which many people can't trade, I know, but I'm going to show it, is the Euro-Ruble. I mean, it's very clean. It had an impulsive move higher. It has a corrective double zigzag move lower, which I expect to evolve in one more leg, and then I would like to be a buyer on this. I'm not going to stick more to the analysis with this because I know that many people want or can't trade it. So I just wanted to mention it because if somebody is interested, actually, I think that it's one of the best opportunities out there at the moment. Oop. And let's have a look at a few questions. By the way, I also want to mention that oil is breaking higher. I think I wrote it in the chat room before. Yep, that's what I'm seeing in oil. So we had a move higher, a corrective move lower, a move higher, a corrective move lower, because we're now breaking above this channel. So I'm really expecting that it's very likely that we're going to get follow through to at least this area, the 53.30. So I think oil is one of the pairs that looks quite good at the moment. As I said, gold and silver look good at the moment as well, but because of their very strong correlation with treasuries, I would be very, very skeptical of chasing strength here. Very skeptical. So, I'm monitoring them, but I would be more likely to short them at a higher level if we see a nice rejection and a nice rollover from bonds than anything else. Pound USD was like a roller coaster, David says, 100%. Pound is trying to press short, 5-minute time frame. Okay, Brian, sorry, I'm not looking at 5-minute time frames because they just skew my, my perception. I'm still bear on UJ, Emma says. Okay, yeah, USD yen. Okay, the pros and the cons here. First of all, I was viewing this as an ascending wedge. In this case, that's why I expected that, you know, the path of least resistance were likely lower, but I'm absolutely not sure how much room we have to move lower. We can easily move towards 110, I'm guessing, but I don't think it's going to be very easy to go lower than that. I mean, no, nah, it's, you know, it's, this move up was impulsive. As long as we see, you know, a controllable move lower, I'm more inclined to, you know, to believe that it's going to rebound once again. Although you just need to zoom out to see that this, as long as other tickers that we have been monitoring, has been a very, very choppy path. I mean, look at it. Since January, in essence, so for the whole year, we've just been oscillating higher and lower, anywhere between 107 and 115 roughly. So we have been going up and down in an 800 pip range, sometimes producing very strong moves one way or the other, but in essence, 10 months have passed and we haven't done anything. So, you know, like we were saying yesterday with Grega for gold and silver, etc., you know, this kind of a trading environment does not give you conviction to, you know, to go all out and do something, because, you know, only shorter term moves thrive in this environment. Like longer term moves, you want to be a buyer of something because you believe it's going to move, you know, higher, or you want to sell something because you believe it's going to move lower. They might work for a few days and then you might see a complete reversal and then try to chase it again and again and again and again and the same. And, you know, we have to be a little bit patient. I've been through this multiple times. I've seen it happen, and I know that sooner or later, you know, this environment gets resolved and you get you get a very nice trending market once again. And this is when you should be devoting more capital in taking trades. Sometimes you just need to, you know, to stay a little bit back and observe and take very, very selected opportunities. S&P tick chart flat, commodities first than Forex. UJ being in such a range on the weekly, I agree. Yep, Emma, absolutely. GBP USD keeps falling, faking out. Yeah, all the time. That's very true. USD ZAR back on trend line. Okay, let's have a look at the USD ZAR. Okay, this is the trend line you're referring to, and yeah, this is a very correct comment. I was thinking of buying the USD ZAR here if we saw a reaction from there, but, you know, we sliced through it like it was, you know, it wasn't even there. So, you know, good thing I took profits there. I mean, this ascending wedge, you know, for me, ascending and descending wedges are the most powerful formations. So, you know, this helped me in, to stay on my toes and actually book some fast profit instead of making it a loss now. Now, what's going to happen from here? I'm definitely not going to be buying USD ZAR as it's plummeting lower. So if we see a reaction from the trend line that's broken and now is being retested, and I see some follow through, sure, fine. But, you know, I have no reason to try to catch a falling knife at the moment. I mean, why give back the profits I made being long just to try to catch a falling knife? We've had 4 consecutive, you know, down days that are quite strong. We've completely retraced and more this ascending wedge. So this can be like a false break above the triangle to trap people long and then get a continuation lower. Because usually, anyhow, triangle formations are continuation formations. So perhaps that was just a fake out move. We're gonna have to see. I'm definitely monitoring it as I'm monitoring the rest of the exotic currencies. Because, for example, USD ruble seems to have formed a flag, and it's breaking below it. The USD Turkish lira is correcting lower. This one by far looks to be the strongest, having to do with US dollar. So to be honest, I still see an opportunity to buy there, here to be exact, as long as we see a reaction you know, I still view this as an opportunity because it's holding up very, very nicely. The USD Singaporean dollar, on the other hand, as we said several days ago, got rejected from the channel, so no reason to not move once again towards the channel support. So, you know, as it seems, we're getting a lot of signals that USD might continue to be weak for some days, some more weeks to come, perhaps one more new low, as Greg is saying. No having to do with the indices, because you know, people have mentioned it. That's a good trade, just being long palladium, and you know, good for booking it. Steve, your thoughts about Nikkei? As usual, yeah, my thoughts about Nikkei. Listen, Nikkei had a very beautiful pattern, and I was more than willing to be short Nikkei. It had this very beautiful ascending wedge. I mean, a huge formation, a formation that dated back to the summer of 2016. Okay, so I was monitoring this price action up here, because if that ended up rolling over and accelerating lower, I would really love to be involved with this. But you know, that's why you shouldn't be jumping the gun, because what looked like you know, a probable very nice reversal formation ended up in just producing a resumption and a parabolic move higher, as I said before when we were speaking with Blake, which has penetrated above. So in this case, I think that you should keep on looking higher, simply because it's a very good likelihood that a retest of this broken trend line is going to act as support from this point on. So you know, any pullback to the trend line resistance can really offer support and for another move higher. On the other hand, if for some reason we reverse hard and we fall back into the wedge in a way that shows that, you know, downside momentum is accelerating, then it's a totally different story, because I'm gonna consider this to be an overthrow, in which case it's going to be a very bearish development. But that's now a secondary scenario, because the main scenario with the price action we're seeing is a pullback, a retest of the broken wedge, and the resumption higher. Okay. The SPX also, let's have a fast look at the indices. The SPX, there's absolutely no reason to be bearish. I mean, this looks like an ascending, if you see it on a 4-hour chart as well, it's like a slightly ascending triangle. This looks like a very powerful consolidation. I mean, in the sense that, you know, when price action is consolidating after you know, such a prolonged move, and it cannot even retrace lower usually, it means that you should expect another push higher. Anyhow, it's already creeping higher point by point. The Dow Jones also remains very, very strong. Although I have to stress out here, because that I'm monitoring this ascending channel, which has been in place since the lows we had in 2016, and we are back again at resistance. Okay, and this move has been extremely strong. RSI is again very overbought. So the Dow Jones is also showing me, as I've said, I'm already short the S&P, and I want to add a little bit higher from here. I expect some pullback in the US stocks, and I expect it rather soon, but I never said or implied that I expect this to be the top, because you know, you cannot be calling tops in such a prolonged bull market. Okay. Nasdaq has already played out what we thought it's going to do. I had said in advance that I believe that this is a triangle that's going to break to the upside, and I would like to see it test the 6,145 area, which is the 161.8. So everything is falling very nicely in place, because the Dow Jones is almost at the channel. The Nasdaq is almost at the 161.8. The SPX is again on a channel resistance, very overbought. Although I think that now the main scenario here is to give us one more little push higher before lower. But I do believe that we're going to soon get little pullbacks. Okay, little. I mean, depends on what you consider little. I mean, might be 50, 60 handles, for example, in the SPX. But definitely, no matter what happens from there. For example, in the SPX specifically that we're talking about it, as long as we stay above 2,485, there is absolutely no technical event that will have taken place, no matter how fast we plunge, towards that level. So let's say that we even today roll over and we move lower quite a lot. So what? I mean, the closest decent support is there. Unless you see that level getting broken, everything else is just noise. I mean, this remains a very strong bull market that creates formations that point that it can roll lower, but the only thing it keeps producing is like shallow ABC corrections, like this one, like this one, like this one, like this one if you want to go on lower time frames, or this one, and it just keeps on thrusting higher, creeping higher, to be honest, because it's not doing it in a fast pace, but it still does that. Let's have a look at the USD CAD. Joe is asking for it. Okay, the USD CAD, nothing new with it. I mean, we are once again on support, this 24, 50, 60, 70, 124, I mean, of course. It was the low here, it was the low there. We initially got rejected when we retested it, then it was a support there, it was a support yesterday, it might be a support as well today. So what I'm trying to say here is that, yeah, USD CAD might resume to the downside, but in order for me to be convinced that something like that is happening, I want to see a daily close below the zone. Unless I see that, I don't have conviction. USD NOK, on the other hand, is a little bit closer to giving such a break, because the equivalent zone here, although we can extend it a little bit lower, is somewhere here. So USD NOK is also exactly on a support zone. So I'm gonna be convinced that both of them are headed lower as long as they clear the equivalent zones. Until then, I'm monitoring, but they're very close, I have to say. They're both testing key areas of support. DAX, yeah, sure, absolutely. Okay, the DAX is also very clean. Okay, there we go. Okay, so the DAX remain in this very steep ascending channel.
We have Norm Winsky waiting, buddy.
Okay, I'm done after the DAX then. Okay, the DAX is very strong. It's at all-time highs. Once again, any pullback from wherever it happens, first support is here, 1280, 12,800. I mean 12,840. If that level fails, then look for 12,658. There are many areas of support that, seeing this structure, I would expect at some of them the DAX to get bid again. I said so that I'm bullish after seeing that this was the corrective pattern we had, and I'm going to be bullish once again once we get some kind of a correction lower. I don't think that correction should go below 12,400. So as long as we remain above 12,400, I expect any pullback to be bought. Okay. Okay, Dale, enjoy the interview, my friend. Everybody have a very nice weekend. We'll see each other again on Monday.
Thank you, Steve. Hi, Norm. How are you? I'm making you the presenter, buddy. Looking forward to hearing your voice and seeing your presentation of what you see happening for turning points.
Oh, my screen. Okay. Can you hear me, Dale?
I can, Norm. It's great
All
to hear
right.
you. And I see the Skype screen now. Okay.
All righty. Very good.
All right.
Yep.
Okay, so Norm, before we start with the presentation, I have to ask you, you know, when I was watching the news and I forgot if it was Irma or Maria, Naples was going to be ground zero for the eye wall to hit. And I'm going, oh my God, I hope Norm's okay. Tell us what it was like to live through that type of meteorological event, because I know you're from Chicago and there's never been a hurricane off Lake Michigan. So
Nope. Well,
what
actually,
was it?
I'm originally from Indiana, but
Oh yeah, that's right.
we didn't have
That's,
I grew up
yeah.
across the street from a creek. We didn't have any hurricanes there.
So, you know, I did read that your house was okay and you evacuated. Tell me this, was it, did you experience more fear with that than you did on any trade you've ever taken in your long career?
I don't know how to compare the two. You probably read that I said a thing saying that I ran away. You know, I escaped to a
Right.
friend on the east coast of Florida. So I'm on the Gulf Coast still. So
Right.
I drove about 3 hours to my friend's house and figured I'd be farther from the hurricane then. And it was still pretty hurricaney there, but probably not like what it was here, you know.
Yeah. So,
Actually, my neighborhood did pretty well. When I came back, my neighbors told me the power was only off for 3 hours. By 3 hours after the hurricane left town, the power was back on.
yeah, that's pretty amazing how they got it together there in Florida.
Yep.
So I'm just glad you're okay. I was concerned watching the news and hoping, you know, I talked to Victor. I was talking to Victor Zuberoff. I think I asked Larry on Skype if Norm was okay. So I'm so glad that you were protected from, you know, having loss of, you know, life or property.
Thank you. I had tiny damage to my house, and you know, you can't, you know, and I've never lived through anything like this before. And one of the problems is that all the people who might be able to help you are overwhelmed now, as you might guess. So, you know, I got some tree damage, and so try to get a tree guy here, probably be weeks or maybe months before anybody will show up, that kind of thing, you know.
Well, so you get a little Hanukkah bush for the season, right?
Something like that, yeah.
All right, so Aussie, interesting opening up with a currency for us here today.
I know. I'm going to initially start out talking about the Moon Dance. That's a great song.
I love it. Yeah.
Van Morrison, Moon Dance. I love that song.
So was this a special moon, this harvest moon we had a week ago?
I don't know about special, and that it was a harvest moon. I think, and my understanding is China basically shuts down for an entire week for the harvest moon, right?
Huh, I didn't know that.
One of their traditions.
They still hoard gold though during that downtime, don't they?
Don't know about that.
Yeah. All right.
Anyway, so you know, I've been on your show a few times now, and your your reincarnation here, and
Yes.
I think you usually talk about the moon, and I just thought I'd really hammer home how important the moon is. I'm sure some of your folks think I'm crazy, but that's okay. Well,
No, you know, I interviewed another lunatic yesterday, and he had some signals off the harvest moon last week. So
okay,
they're used to the audience is used to some esoteric thinking. So
okay, great. So let me show some charts here, so we're not holding anybody up on the back end, right? So you know, I don't end up talking too long, right? So anyway, so I thought I'd show some currencies, and I know most of your people are currency people, so I just thought I'd show why you might want to be looking at the moon, the full moon, new moon. Here's your dates, the last two, what do we call lunations? That's a new moon or a full moon. In September, you had September 20th, 1:30 a.m., you had a new moon, and memorize these dates if you would. And October the 5th in the afternoon, these are all Eastern time, U.S. Eastern. And that's 2:40 p.m. for the full moon on the 5th. Let's go look at the charts. Here's the Aussie dollar. I'm doing futures, which I think might be upside down from your Forex.
No, it's the same.
Is it? Oh, okay.
Yeah. Yeah.
So Aussie dollar is making tops here in September. Is that right?
Yeah. Yeah. So you had a high on the new moon and a low on the full moon.
That's it. So they were off just a little bit here on the 6th, which was just after the full moon, right? You nailed it to the day on the 20th, right? You see that? Here's your euro. Not quite as crisp as the Aussie dollar, but it did that top there. And got you. There's your. I got the dates on these little boxes here. You know, there's the 6th, which is again one day after the full moon. Moving ahead, here's your British pound. Well, go ahead.
No, that's nice. Yeah, go ahead. No,
here's your British pound.
Basically, the dollar, that was on the NFP. So we had the full moon. That must have been around the NFP.
And what's MF? What is that?
Non-farm payroll, NFP.
Oh, I'm glad you brought that up, because I want to tell your folks they don't need to look at any of that. They should turn off the news, turn off all the stuff. Don't worry if Janet Yellen has a new hairdo or any of that stuff.
She hasn't had a new hairdo.
Well, I'm just making that, making a joke there to drive home the point. If you're reading all that stuff, you're just getting confused, and all you need to do is look at the simple chart patterns. Here's the pound rallied up into the new moon and made a top. What more do you need? Then it would decline into the full moon and made a low.
All right, so that was, the last few weeks. Have you noticed that being a repetitive? I know you've seen it be repetitive in corn. You told me corn really follows that.
The greens love the moon. But I thought I'd emphasize the currencies here today because your folks are, my understanding, mostly currency people, right?
Oh, it's kind of a repetitive pattern then, highs and lows, turning points anyway. Yeah. You don't know if it's going to be a high or low.
No, I don't know anything. It works all the time, and likewise, this doesn't work all the time, but it works a high percentage of the time.
That's all you need.
That's all you need is all you need is love and the moon, right?
Yeah, I love you, man.
All right, so what's that? There you go. I just thought I'd quote that's the Beatles. That's the Beatles. All you need is love and trade with the moon, right? That's it. Now, obviously, there are other things. So here's what's coming up. We have got a little bit of a cluster for the stock market coming on Monday. But in the bigger picture for all the markets, I have a big cluster of big planetary events occurring coming up on, Wednesday night. AC is after the close, so that's the 18th after the close. Okay, right. After your regular day session, time overnight, and then into the 19th. And look what I found there, Dale. The night of the 19th, we have a new moon. Okay. And then we have some things with the U.S.
Why is Libra the ruling sign for sugar and wheat? Because it balances it on the scale?
Because Libra is the sweetest sign in the zodiac. And if it's sweet, true? It's Libra. And because sweet rhymes with wheat, I found that works too.
Huh.
Okay, so guess what? Here's my individual, I have the currencies in general tend to dance to the moon, but I also I do the astrology for the different countries, currencies, and central banks. I was not able to find the pound is along in it. We may have trouble. May have a lot more outside. Anyway, so I was not able to find when the British pound began because it's a long and convoluted history. And going back 1,000 years or so, but I'm able to do the based on reorganization of the United Kingdom, the British Empire. I'm able to do a chart on the United Kingdom, which I find works pretty well for the pound. And guess what? Most of the month, the British pound, United Kingdom anyway, was sleeping. There's nothing going on until we get to the 19th, in the night of the 18th, the morning of the 19th, which lines up with the moon. So that's nice. You got big picture is
the pound's been going up this week, so maybe we'll get some type of
if the
turning
pound continues,
points
if the pound
fade
continues
up there.
higher into around the 18th, 19th, then I'd be looking for a top.
Okay.
Then you have another change in trend point on the 23rd. So watch those 2 dates, right?
Yeah.
Okay. All
David,
right, moving on ahead here.
There's a million places you could find online to give you the calendar. Even calendars have new and full moons.
Okay, that's true. And you could go and do your research, and if you like what you find, then you call Norm, right? Because you want to study some more. Maybe that Norm ain't so crazy after all, right? All right, here we go. Here's the S&P. This is kind of my, thing I do the most work on because I kind of started out in the stock market. I don't know if Dale gave any background or not, but I started out in CBOE on 1975, right out of college. I was a market maker there for 12 years and also traded at their sister floor at the Board of Trade, Chicago Board of Trade. All right, so anyway, as you can see, the S&P, here's a 10-minute bar chart. So we're covering about a month here. And so you can see that we had an extended rally, and now we're kind of lost that loving feeling. And we're kind of going sideways, chopping around here. Now I have a little cluster of some gain points and so forth for Monday for the over the weekend here for the stock market. So I was hoping, it doesn't mean it's going to happen. That's probably a good indication it's probably not going to happen. But my ideal preferred scenario would be if we got a little pullback yesterday, we could pull back again into the weekend, and then we could make a low, because my biggest window coming up is the night of the 18th, 19th, when we have a big Mercury event right there at number B, Mercury 0 south latitude. That's one of my top things. And you can see I have all caps on stocks and soybeans. And so when the major Mercury event and the moon line up, that's sometimes a big event.
We go up into that date. I believe you said major trend change on that date. So,
we have something.
The major trend has been up. So is it possible that we get some type of significant high in the S&Ps?
I'm going to give you an example. So in May of 2015, we had the new moon line up with a major Mercury cycle, and I went on an interview program. I think you were on sabbatical or something maybe then. And I said, this looks like it could be important, and it turned out to be the 18th, 19th, that's what it was, and that turned out to be the high of the year for the stock market.
Wow.
Okay, so I'm not saying that this is going to be the high of the year, but could be an important trading top there somewhere around the 18th or the 19th of the month, okay?
I'll be paying attention. There
you go. Here's your beans, in case you're inclined to trade commodities. Again, the beans, the greens back here, this was a full moon, this high of the year. That was, I think the full moon was on a Sunday, that was the night. And I think it was off by about a day. And there's the 10th, and there's the 11th, and then it's the high of the year. Okay, that's pretty nice if you can catch the high of the year. And there's a nice little trading top there, that was off a little bit. Here's a lesson here. If the market is in a tight sideways range, don't try to trade these with these points, because we're looking for extremes. We're looking for the market pops up, pops down, has some kind of buying climax, selling climax. And if you get that, or an extended move like this kind of thing here on the stock market into one of these points, then you got a chance for a reversal, All right, so anyway, but this was off a day or two, so not perfect. And then we went down and we bottomed, and this is showed you that this is the grains. This was one of the stronger markets because it bottomed a day early on. On the 4th, still had a chance on the 5th to get in near the lows. And then you can see we've been moving higher. Most of the grains have been scraping bottom. The beans are doing a little better, Okay. All right, let's go look at, now we're going to look at a whole different technique now. Now we're going to throw the stars out the window here for a minute. And sorry for the noise in the background. I got somebody decided to mow their lawn next door. And so that, if you hear some noise, that's what it is.
Can't hear it.
And so, I'm sorry?
We can't hear it.
And
So it's okay.
now I'm going to talk about fractals. I'm not going to go into the details of how I do this, but I'll just tell you generally that by looking at the price pattern of January each year, you can get some amazing forecasts for different markets. I do this for about 27 different markets, and it's very simple, and I could teach a 10-year-old to do this in 10 minutes. There's no formulas involved. It's all graphic, okay? The noise, this guy will pass by to hear that noise. There he goes.
Yeah,
Hold
yeah.
on a minute. He'll be gone in a minute.
He needs to learn about fractals, and he could put his lawnmower away.
There you go. So anyway, you can see this is 2016. The blue bars were the forecasts I laid out in advance in February for the entire year, and then after the fact, I overlaid these black bars with the actual prices for the Aussie dollar. So I think that worked out pretty well. What do you think, Dale?
Yeah, nice.
Okay. So it's an amazingly simple method. Okay, there you go. See, published February the 14th, 2016, had these blue bars on the chart here in advance. Okay, told you that watch out for the major high right there, and that pretty much nailed the high of the year for the Aussie dollar. Here's your Japanese yen. Japanese yen has been working great several years in a row now. Last year, there you go. I was looking for a big top there, and that was the high of the year. See that? Then big down. You got the big down. Okay. Here's the, okay, now let's look into the future. Here's my Aussie dollar for 2017. Here's the blue bars. And you can see there's some positive, there's some value here, I think. Looking for kind of for a topping area here in September, and kind of some weakness into November, and then maybe back up in the end of the year. Okay. So I will, the people that contact me, I will teach them how to do this. It's very simple. Okay. Like I said, if you got a 5th grade education, you can do this. Okay.
Okay.
No fancy
I think a lot of people in here are familiar with fractals. I see a lot of fractal work on Twitter, and I've interviewed guys with fractals. So this is, so people probably have seen them work and would love to learn how to do it.
Okay. Well, I can teach you how to do that.
Instead of relying on other people's work to have a fractal.
Yep. All righty. Well, that went pretty quick because we're getting to the end here. You get all the free stuff, Dale. So if they will contact me, they can get my current letter and a class. I got about a class that runs about 5 to 6 hours. It's individual class, just me and that person on Skype.
One-on-one.
And
one-on-one,
go through my letter and teach them the different methodologies that I use. I do Astro. I do advanced Fibonacci/Lucas time cycles and mathematics. I teach all the mathematics of that, and they'll go from Fibonacci grade school to graduate school in about 15 minutes. And then I teach them some Gann principles, the basic Gann principles, and also the fractals, so and how to use my letter, and it's like a power tool because like here, let's go back and look at the Aussie dollar calendar. I have a whole calendar for about 30 markets where you see this sort of thing, and in a matter of seconds you can pick out on all these markets where the top days in the month are, and boom, you look at your United Kingdom thing, for example, and you know that the 19th and the 23rd are the top days of the month for that thing, the United Kingdom, British pound, whatever, right?
Okay.
I have that for about 30 markets, so you can do that in seconds. It would turn you into a supercomputer, Otherwise, if you did that from scratch, you'd be spending hours and days doing it. Because that's what I do to get there.
This is your, these are your contact numbers here. And
here's my contact numbers down here at the bottom. As we mentioned, I got about 50 years of experience, almost as much as Dale there. Dale and I were trading back during the dinosaurs.
Yeah.
Remember the old days, Dale? We had the stone tablets there, and you had to be careful not to leave them lying around.
Yeah, I dropped an order on my foot. Yeah.
Because the dinosaurs would come along and crush your charts, right?
Yeah.
That's it was a problem back then. So anyway, and we used to trade by the campfire, right, outside the cave there. All right, so here's my contact info. I'm in, as Dale mentioned, we're still here after the hurricane. That was Hurricane Irma, if I get it right. I'm in Naples, Florida, and there's my phone. If you're in the U.S., you can call me at 239-594-3939. Here's my email, Nwinski, that's Nwinski at Embark, EMBARQ, like root beer, MAIL.com. Or you can call me on Skype.
Yeah, and you're offering the free newsletter trial and a free class?
Free class.
Yeah,
6-hour class. I'm going to go through, try to jam 50 years of experience into about 5 to 6 hours. Like you get like basically almost a college education in 5 to 6 hours. You know,
so anyone who has an interest in this type of forecasting and believes that there's order and harmony in the universe and want to be able to read something besides a candlestick, Norm's a guy you could certainly learn a lot from. And I encourage people to test the waters with Norm.
Thank you. All right, Dale, if anybody want to ask any questions or anything, I'll try to field the questions or whatever you like, or we'll go have a nice weekend or whatever.
All right. Well, you know, you taught me this, Norm. What's the definition of Mazel Tov, which to me meant good luck? What's it really mean?
Well, it's the literal translation is good stars.
Okay. See? So even the ancients were wishing people to have good stars and believe that they,
as you know,
influence. Yeah.
As you might know, Dale, Tov is good, and Mazel is stars or constellations.
Isn't that something? I didn't know that till I knew you. To me, it was always just good luck. But Norm, I'm so glad you're okay, and that, you know, things are starting to come back to normal for you, and you're a gem. And I'm glad that you're still out there doing your good work and trying to help people and show them what it took you decades to learn.
Right, and one of the things that I try to do here is on my forecasting, I've tried to be very specific, very precise, and give people a day. I even have intraday timing where we do this sort of thing, you know, intraday. You know, mostly for the primarily the stock market, but you can also do some trades with other markets. I just started a guy on the weekend. He took my class that past weekend, and he's just learning and started. Said, well, and then I said, okay, I'll talk to you in a couple of days. And I talked to him like on Tuesday, and he said, oh, I'm doing great. I have a goal of make enough money to cover your everything you do, and almost there after 2 days. He said, give me another day or so, and by I think Thursday, he sent me a PayPal for the whole thing. So he learned that over the weekend.
Always, besides it being nice for your wallet, it's kind of good for your soul that
absolutely I'm helping
you've shown someone the way.
Absolutely, so, he's doing great. He's probably averaging, I don't know, $400 or $500 a day, and it's a living, you know.
Yeah, that's a nice living. So thank you, buddy.
Okay, very good.
Thank you.
Looking forward to helping some folks, and everybody have a great weekend. And call me right away so you can. Usually I have a little limited number of people I can do because it's individual class, and so call me right away so you can get in line for the next round, you know, next cycle.
Okay, buddy.
All right,
Norm, and everyone, thank you.
Do any of you people want to ask questions? Do you do that here? Ask.
I could. Any questions for Norm with who's still here? Interesting. Got to run. Thanks, guy. Trading using lunar models, cosmonauts on Wall Street. These lunar ticks are awesome. It's amazing that you can actually trade using lunar. So you got some great responses here, Norm.
Okay,
and,
great.
Do you look at gold?
Yes, I do. But gold was kind of sleeping on my astro analysis this month. It did have a turn due for the 10th, and we did. If you go look at your chart there, I think gold chart.
Yeah, it turned with the dollar. Yeah,
we did make a turn.
Friday.
We did make a turn on Tuesday the 10th.
Yeah. Okay, buddy. Have a great weekend.
Yep.
Have a great weekend, Norm.
All right. Thanks a lot.
You too, Face. Everyone have a great weekend. Don't just count your pips, count your blessings. Enjoy your weekend, do your work, look at your weeklies, and we'll see you on Monday.
All right. Thanks a lot. Have a great weekend.
You too, Norm.
Bye.
Adios.